Welcome to the Property Code. I am Nick, and today we are tackling a phrase that floods search engines across America: how to buy an Airbnb property with no money. The search volume for this topic in 2025 is off the charts. People type how to buy an Airbnb with zero down, how to start Airbnb arbitrage, how to partner with investors, and how to get Airbnb loans. The curiosity makes sense. With rents high, wages stretched, and flexibility prized, short-term rentals remain one of the most accessible paths to financial freedom, but the rules of the game have changed. Let me tell you about Aiden. He is 28, a hospitality manager in Nashville, living paycheck to paycheck but obsessed with real estate videos on YouTube. For months, he repeated a question that millions ask every day: how do I start when I have no capital? He could not afford a down payment, but he had skills: customer service, interior design taste, and local market knowledge. In early 2025, he made a choice. If he could not own yet, he would control. That decision marked the start of his Airbnb journey. The first path Aiden discovered was rental arbitrage. It is one of the oldest and simplest methods to get into short-term rentals without owning property. The concept is straightforward. You rent a property long-term from a landlord, furnish it, list it on Airbnb, and keep the difference between the rent and what you earn from bookings. The trick is permission. In 2025, with tighter city regulations, landlords are cautious. So Aiden learned how to pitch. He made a one-page proposal explaining exactly how he would operate. It included proof of his hospitality background, a short-term rental permit guide, a sample insurance certificate, and a promise of professional cleaning and regular inspections. He did not hide what he planned to do. He sold it as an advantage. "You get a guaranteed tenant who cares for the property like a hotel," he told landlords. "I cover minor repairs, I pay on time, and you get peace of mind." After 20 rejections, one small landlord finally said yes. Aiden rented a downtown one-bedroom for $1,400 a month. He used zero of his own money for the startup. Instead, he partnered with a friend who fronted $5,000 for furniture in exchange for a 50-50 profit split until repayment. He bought used furniture through Facebook Marketplace, painted the walls himself, and built a modern, cozy aesthetic that looked expensive but cost little. Within a month, the Airbnb listing went live. The first weekend brought 2 bookings that covered half the monthly rent. By the third month, Aiden was consistently earning $3,000 a month in gross bookings. After rent, cleaning, supplies, and utilities, he cleared around $800 net. Within 5 months, he repaid his friend's investment and renegotiated the split to 70-30 in his favor. He was not rich yet, but he was free from the myth that you need a fortune to start. His second step was scaling through partnerships. Once he had a successful listing, he created a small presentation deck that showed his results: occupancy rates, reviews, and monthly profit. He approached 3 property owners with vacant condos and proposed a revenue share. "You keep ownership," he said. "I handle everything: furnishing, pricing, cleaning, and guest communication. We split profits 50-50 after expenses." 2 owners agreed. By the end of the year, he managed 3 Airbnb units, all without owning a single property or spending significant personal cash. In 2025, this model thrives because of new technology and changing market sentiment. AI-driven pricing tools like Wheelhouse or Price Labs automatically adjust nightly rates based on demand, events, and competition. Cleaning logistics can be automated through smart scheduling apps. Even customer service can be streamlined with AI chatbots that handle guest questions. The modern short-term rental operator does not need to be wealthy, just organized, consistent, and transparent. However, the Airbnb landscape has matured. Cities now enforce stricter rules. Some require local permits, business licenses, and hotel taxes. Aiden learned that compliance was not optional. He registered his business as an LLC, obtained the required short-term rental permit, and collected occupancy taxes through Airbnb's automated system. That structure made him legitimate and attractive to partners. When investors see that you run operations by the book, they trust you faster. Aiden's third move was leveraging other people's capital, legally and smartly. By mid-year, he pitched a small private investor on a joint venture to buy a duplex zoned for short-term rental. The investor provided the down payment, Aiden handled the operations. They structured a joint agreement giving the investor 70% of equity and Aiden 30%, but he kept 50% of net profits as the managing partner. The property cost $400,000, rented as 2 units, and grossed $6,000 monthly. It was a professional partnership born from credibility, not cold calls. In 2025, creative financing has also evolved. Programs exist for owner-occupied properties that allow as little as 3 to 5% down. Some investors use this to buy a small multifamily, live in one unit, and Airbnb the others. Others use DSCR loans, where the property's income qualifies for the mortgage rather than personal salary. Combined with seller credits or builder incentives, it is often possible to enter deals with minimal cash out of pocket. The key is documentation and relationships. Lenders want to see realistic projections and responsible management plans. Aiden also learned what not to do. He avoided taking personal loans for short-term rentals, resisted chasing luxury markets with high volatility, and ignored influencers promising $10,000 months overnight. Instead, he treated his Airbnb portfolio like a small hospitality company. He studied guest analytics, optimized his cleaning schedules, and standardized furniture kits to keep replacement costs low. Every dollar saved was a dollar earned again next month. When high interest rates and regulatory changes rattled some operators, Aiden's low-debt, high-service model made him resilient. He focused on mid-term stays, guests staying 30 to 90 days, such as travel nurses or remote workers. They booked directly through furnished rental platforms and provided steady income without frequent turnovers. It was not glamorous, but it was consistent. That shift reflected a larger national trend: the blending of short-term and mid-term rental strategies for stable cash flow. By December, Aiden managed 5 properties, 2 under partnership, 3 through rental arbitrage. His average monthly profit across all units was nearly $4,000, and he had built relationships with investors eager to fund new deals. He had become a full-time Airbnb operator without ever starting with his own capital. His story proves that the modern economy rewards creativity more than cash. If you want to follow in his footsteps, remember the real sequence. Start by learning hospitality. Guests remember experiences, not spreadsheets. Next, master your local regulations. Permits and taxes are the foundation of legitimacy. Then, build relationships. Landlords, investors, and cleaning teams are your partners, not just expenses. Finally, document everything. Transparency is your currency in this business. The phrase, buy an Airbnb with no money, is not magic, it is method. You leverage your skills, your time, and other people's resources until the profits from your first deal fund the next one. What begins as management turns into ownership. What starts as one unit can become a brand. In 2025, the tools and data are all there. What's missing for most people is execution. The truth is that zero money never means zero effort. You pay with time, consistency, and creativity until your returns pay you back. Aiden worked nights answering messages, mornings fixing broken lamps, and weekends reviewing listings. But by year's end, his phone buzzed with bookings instead of bills. He was free from the paycheck loop, one guest at a time. If you are listening and wondering whether it still works, the answer is yes, but only for those who treat it like a business. The market no longer rewards amateurs chasing viral success. It rewards operators who blend professionalism with personal touch, automation with empathy. The opportunity is not gone, it has matured. So the real question is not how to buy an Airbnb property with no money. It is how to start controlling real estate with value, trust, and skill until money becomes a side effect of mastery.